Good morning, good afternoon, and good evening, everyone, and welcome to Capital Compass Navigating Funding Through Relationships. My name is Cami Twiggs Taylor, and I am the Director of U.S. Small and Medium Business Entrepreneurial Programs and Volunteerism at the NASDAQ Entrepreneurial Center. For those of you who may not know, the NASDAQ Center is a nonprofit improving access and knowledge in entrepreneurship to advance economic progress for all. As you'll see in the chat in a moment, the NASDAQ Center provides programs, resources, and exceptional mentorship to help entrepreneurs fuel prosperity, no matter where their journey begins. Be sure to check out the links and resources shared in the chat. At this time, I'm going to launch a few polls to step back and take a temperature gauge on how all of you all are doing today. We use this information to guide the programs we provide for this global community of entrepreneurs. If there are specific topics or challenges you'd like us to create resources for, feel free to share them in the chat. Just a couple of quick housekeeping notes before we get started. First, let us know where you're dialing in from by dropping it in the chat. We'd love to see where everyone's joining us for our time together today. Second, we'll have a live Q&A at the end of the event, so feel free to submit your questions at any time using the Q&A function at the bottom of your screen, and we'll do our best to get to as many as we can. While you are answering, I'd also like to take this moment to recognize the incredible support of our corporate sponsors. The work we do at the center wouldn't be possible without the generosity and belief of our partners and funders, including NASDAQ, Wells Fargo, JP Morgan Chase, KPMG, Walmart, the Asia Innovation Hub, Wilson Sonsini, the Nareet Foundation, KKR, and BPM. We are deeply grateful for their partnership, and we hope you'll join us in sharing that appreciation. All right, let's take a look at these polls. What is keeping you up at night? Is it finance, sales, marketing, scale, pivot, team, or figuring out how do you survive? What is keeping you up at night? All right, let's see and take a look at what these results look like. Wow, looks like many of us are thinking about sales. We also have finance coming in second, then scale, marketing, team, surviving, and pivot. All right. Well, without any further delay, please joining me in giving a warm welcome to our Executive Director, CEO, Nicola Corzine, who will be our moderator for our event today.
Thank
Nicola?
you so much, Cami, and thank you, everyone. It is so great to have you here. We are working on fixing the chat. Thanks so much for calling that out. And thank you to Cami for calling us on prosperity. I'm kind of excited to anchor to that word just for a moment because we know the reality of all of you trying to grow and scale your businesses is very much around bringing prosperity to yourselves, to your loved ones, to your communities, and most importantly, to the businesses that you want to see thrive. And to do that takes capital, or at least in many instances, it does. And so today I am so very fortunate to be joined with three exceptional leaders who are also perhaps some of the greatest entrepreneurial ambassadors and supporters in the world that I am fortunate to learn from each and every day. And I'm going to be introducing them here in just a second. And we're aiming today to try to dispel a lot of the myths that are out there in the world right now relating to raising capital. We know it is a tough, tough market, and we are so sorry that you are all on this journey in this moment and in this time. And our hope today is not just to talk at a high level, but to actually break down a lot of those challenges and try to get you some actionable insights that can get you closer to clarity and confidence and conviction on your capital journey. If we do that, then I think we've done good today. So fortunately, it's not going to be me sharing that with you. It's going to be these three great leaders. So I hope you'll join me in giving a very warm welcome. Kimberlyn Harris is joining us. She is the head of business growth philanthropy at Wells Fargo. I have Allison Kelly joining us, CEO of ICA Fund, and Shannon Herbert, CEO of the renowned WakeF. Amazing to have you all. Thank you so much. Welcome. Rather than do an injustice to the incredible work that brought you here today, I'm going to invite each of you to introduce yourselves, and I'm going to do it around a question. The question is this: why are you inspired to be today talking about capital for these incredible entrepreneurs who are joining us? So I want to have you share like what capital really is to you as you introduce your background. Shannon, I'm going to start with you. Allison, I'm going to pop to you, and then Kimberlyn, you're going to round us out, and then we'll get started with our great conversation. So, Shannon, welcome.
Well, thank you so much for having me here, and it's great to be with you all today. Capital, and why I am inspired to be here today is because I know how far capital can go to helping entrepreneurs achieve the dreams that they set for themselves. So many times, folks talk themselves out of capital before they're even able to have the conversation with the lender or the finance professional. And so my job is to make sure that our products and services are accessible to everyone. And that capital conversation is so important. Everyone deserves to have a relationship with a lender and a financial institution. And we need to create those pathways to make that possible. And so if I can help facilitate the journey toward capital or help someone navigate their way through that capital conversation, that's what I intend to do.
What a beautiful framing. And for those who may not know Wakeif, could you share just a little bit about Wakeif's journey and what it is that you get to do to help people experience that journey and that pathway, Shannon?
Absolutely. So WAKIF stands for the Washington Area Community Investment Fund. We are a CDFI, Community Development Financial Institution, located in Washington, D.C. We serve the Washington, D.C. metro area, and we have been serving that area for the last almost 40 years. We work exclusively with small businesses and entrepreneurs by providing capital in the forms of loans and grants, but we also provide technical assistance with wraparound services. So, all of the things that our entrepreneurs need from financial management to social media strategy. We own the Anacostia Art Center, and inside of the center is a co working space where we provide the same level of technical assistance and support and advisory and coaching to our entrepreneurs while also giving them workspaces and providing them with capital. So it's everything you need under one roof.
I love that. And for anyone that happens to be in DC at any time, I definitely encourage a visit. It is absolutely gorgeous, exceptional space, so inspiring. Thanks for being here, Shannon. Allison,
Awesome.
welcome. It's so great to have you. Tell us about what capital means to you in this moment and why you're excited to be talking about it. And then weave in, if you will, your ICA journey and what ICA is working on right now.
Thanks, Nicola, for having me. And hello, everybody. I'm thrilled to be here. Please forgive my voice. I've been under the weather. Lots of flus going around in the West Coast right now. Doing my best over here. Um, I love being part of this conversation. Shannon, you did such a beautiful job of framing it. What I would add to what you said is really around demystifying what it means, these different capital products, this capital system. It can feel very like people can feel removed from our ability to connect to it and participate in it. So, what draws me to this work and why I'm so passionate about it is making it more accessible for more people and then using the tools of finance in more equitable ways. So, at ICA Fund, we are also a community development financial institution, but instead of being just a lender, we are actually a venture capital certified community development financial institution. Isn't that a mouthful? What does that even mean? It means that we can use other types of financing tools to help founders grow and fuel the growth of their business. So we can use equity, convertible notes, preferred equity, redeemable equity, debt, working capital, all these words, right, that can feel very hard to connect to, but we're here to bridge that gap and help put more capital into the markets and the communities that we support, which is the 9 county Bay Area out here in California. And at ICA Fund, That's what we do in terms of capital. We also work deeply with founders to help improve financial hygiene. Often with the founders that we work with, understanding their own financials and keeping clean books is one of the hardest challenges because you can't afford to pay somebody too much at this earlier stages of your business to get really reliable, trusted financial statements. But without that, it's really hard to make informed strategic decisions. So we focus on financial hygiene, profitability, and then because we do provide equity investments, we're also helping companies with their growth plan and their exit plan. Ethical exits is what we call it, or mission-driven mergers and acquisitions. So that's a bit about ICA, and this is our 30th year. And I'm just thrilled to be here with you all and so grateful I get to do this work.
Oh, thank you, Allison. I love that you use that word mission a couple of times. I have a feeling we're going to be owning that word in the biggest of ways and actually daring to put capital and mission together, which is really exciting conversation, I think, for our founders today. On those notes, Kimberlyn, welcome. It's such a treat, such an honor to have you. Can you share a little bit about what you're inspired with through this big word of capital in the conversation we're holding today? And then please a little about the incredible work that Wells Fargo Foundation is leading.
Well, good to see you, Nicola. It's a pleasure to be here with all of you as well. Shannon did such an amazing job with her intro, and so I'm just really happy to be here with you. Also, as I think about capital, I'm with Allison in that I'm a little under the weather, so thank you for your patience with my throat. But Shannon and Allison did both such a fantastic job summing up what their amazing CDFIs are doing in this space and supporting entrepreneurs. And I, at Wells Fargo, in my role, have the pleasure of working alongside both WACAF and ICA Fund in this amazing work. What has me inspired right now is the word access. We heard Allison use it. It is breaking down those barriers, is removing just the understanding around how does capital work? When do I need it? How do I leverage it? When is the best time for my particular firm or business to really get engaged and access the right kind of capital is what I'm really curious and excited about. My role at Wells Fargo is to make sure I break down those barriers to that access. Is it credit readiness? Is it asset building? Is it down payment assistance? Is it the simple fact that you're just not aware of all the ways in which WACAF or ICA Fund can really help your business to grow? That is my role at Wells Fargo and what we're thinking about even as we go into 2026. And all of that keeps me inspired as we look at the data and we see so many more entrepreneurs and individuals raising their hands every day to be part of this ecosystem, to be part of community. I'm really inspired in how we're going to be able to help them get access to the capital that they need to grow their business.
Incredible. Incredible. So you see why I'm excited to have this conversation with these three amazing leaders today. Open invitation. You all submitted some really good questions ahead of time. Thank you. Thank you for doing that. But it wasn't a one and done. So if you have any questions as we're going through the conversation today, please pop them into the Q&A function that you'll see at the bottom of the screen. And we really are going to try to answer just as many as we can. We're here in support of you, as you've heard from everyone here. We want to make this as useful to you as possible. And there is so much out there in this moment and so much noise to sort of swim through. So we're going to do our part today. Kimberlyn, I want to actually stay with you to start with, because I think so much of this experience when it comes to capital starts with this fear of, I'm going to go forward and expect that I'm going to fill out things and people will say yes or no based on the things that I put down on paper. And one of the areas I've always been inspired about with Wells Fargo and quite honestly, everyone's journey that have already been mapped today is this idea that it doesn't start that way. It starts with relationships. It starts with partnerships. It starts with understanding who you are and what you're building. Using Wells Fargo as a bit of a backdrop for a moment, can you talk about how you see the role of grants and partnerships as a way to really ignite growth of businesses, but really at that personal level to start with?
Yeah, I think it's such a really good part of the conversation. I tell a lot of entrepreneurs I have the pleasure of meeting as I'm out meeting in different communities that it really starts with relationship, to your great point, Nicola. So I think a lot of times the entrepreneur is in a pinch and I need capital, I need it now. And then they want to go out and fill out an application. before they've established a relationship or built a bit of trust and consistency. The great thing with working with a community development financial institution is that it does start with relationship. And in that application process, if the CDFI has a relationship with you and they know you, there's a lot of opportunity for grace. There's a lot of opportunity for access to resources or supports that may help you have a better, stronger application. And so, what I look for first is that trust and consistency. And again, encouraging founders to start building those relationships. I was in New York over the last couple of days, and I had the pleasure of meeting with a couple of CDFIs. And what they said is when we establish that relationship, it's really about advisory. Do you need an accountant? Do you need a lawyer? How can I really help you to build out your entire foundation long before we get to capital, right? And so as we think about the capital stack, as we think about grants or investments, again, I just want to encourage those who are listening in to start to build that trust and consistency with the local community development financial institution or traditional bank if it works for where you are in your business journey, to build that relationship.
That is so good. And it has a material effect in the growth of businesses. One of the studies that was generously funded by Wells Fargo Foundation a few years ago actually identified that one of the fastest paths to cash flow break even is feeling connected and tied to your community.
That's
And so
right.
our friends out there that are on this, it's not just a nice to have when we talk about the importance of relationship building. It's a must have when it comes to the growth and scalability of your company. Thanks for reminding us of that, Kimberlyn, so much. Um, Allison, I love how you framed it out with, I won't use the buzzwords, but like venture and equity and debt and factoring on, oh my goodness, the sky's the limit. And I know that for so many of our founders that we're privileged to learn from every day, the challenge is like, it feels like there's a game that's being played that they just don't even know. Like they come in and they're like, I just need money. And the money that I need is to do this. Um, for those, and honestly for all of us, what do the words capital stack mean to you? And what actually matters for a founder being able to figure this out? Like if they're worrying, am I seed? Am I friends and family? Like I don't know, I have some revenue that I've raised, I have some that I haven't yet. Where do you help them sort of clear the clutter and cut through all that noise and just get to the part of figuring out capital that can actually matter in their ability to navigate and get clarity on where they should go to raise?
It's such a good question. And as with most things in finance, it can feel so clearly defined. And
Mhm.
actually, it's more nuanced. I mean, most people think that finance is like this very structured, you know, right, fits in a box. Everything is like predetermined. When I think about the capital stack and what we share with our founders is that everything's really on a continuum, right?
Mhm.
You can have debt on one end and you can have equity on the other end of that financial continuum. And there are a bunch of different tools along that continuum. Oftentimes, the easiest way to think about that continuum is around risk. And it's
Mhm.
not about how risky your business is, it's about how much risk is the person or the entity that you're seeking capital willing to take. So for debt and SBA and some of these more structured finance tools, they're willing to take the least amount of risk. There's good reason for that. There's no judgment here at all, by the way. We need all of it. So, just in terms of thinking about where to go for what you need for your business, bankers and SBA lenders are going to be unable to take a ton of risk, right? Because we all put our money in banks. We don't want them risking too much with our money in the bank. And that's what they're using to lend. On the far other end of the capital stack is equity. And investors and private equity investors and venture capitalists, they're willing to take a whole bunch of risk on a portfolio of companies. And they're hoping that one or two are going to be enormously successful. And they're going to pay for all the failures in that portfolio. Um, so along that capital continuum or that capital stack is for a founder to be thinking about, okay, how much risk are each of my capital providers putting in my business and what's it going to cost me? And what am I willing to bear? What costs am I willing to bear? For a loan, many of you already have the experience of it's a principal payment plus interest. It's predetermined, it's not variable. You can know what to expect over a period of time. It's very defined and it's easy to fall into. On the other end of the spectrum, when you start to look at different kinds of equity products, the costs can actually be quite high because you're basically selling a piece of your company to this investor. You're selling a percentage of your business. And so that cost can be what the eventual value of your business is, like a big chunk of that, 10 to 20%. But the bigger cost, you guys, that people don't talk about is that relationship. If you take venture capital or equity investments from somebody that you can't work well with, that is an extremely expensive cost. It creates disruption in your business. It can keep you from realizing your own vision for your business. And so for us at ICA Fund, we're trying to balance along that continuum. We don't want to take agency away from our founders. We are an advisor to the founders. We are a partner with our founders. We're taking structured risk outside of loans. We're further towards the private equity type of risk, but we're really trying to do it in a partnership model, which there aren't a lot of examples of. So we're in uncharted territory, to be honest, but we're really trying to figure out how do we leverage these more risk, the higher risk appetite products for founders who don't typically get access to that kind of risk tolerant capital. Does that make sense?
That's so good. That's so good. I'm going to stay with you just for a second though, because I think often what happens is there's a here and now moment that but just by the nature of the business of entrepreneurship required, right? Like it is I must get this money in the door now. And then there is that sort of lost in translation moment of like, and it may have a signal on what happens next to my business. So I would love for you to maybe expand a little bit on, as you think of a capital stack and you think of this continuity that's happening, are there certain types of capital that do actually signal possibilities of other capital coming into a business down the road? Like,
Mhm.
how do you advise founders who are like, I don't know what 10 years from now looks like, to be thoughtful of still reverse engineering a little bit of capital optionality, which we know is so crucial in many ways for founders to make sure that they're getting those mission aligned relationships in place at the start?
That's such a great question, Nicola. And it goes back to this old adage that I just like remember as a mantra, even for myself. Try to begin with the end in mind.
Mm.
What are you building towards? What is your vision and your dream for your business? And how can you set it up for that eventual success? So, if you're a founder who wants to sell your company and have a big exit, you can take equity, think about how much equity you're selling as you go along and what the implications are for future rounds. Get expert advisors who are not involved in the transaction. We can help you with that if you need it. Um, if, on the other hand, this is your baby, this is your business, you want to do this for the rest of your life, you don't want to exit, you don't want to sell at any point. Or maybe in 20, 30 years, you want to sell to your employees. Debt is a better product for you to think about keeping that ownership and that control of your business. And so don't give away equity early on, because as soon as you give away equity or you sell equity, parts of your business, your investors need you to provide them liquidity. What does that mean? That means your investors need you to figure out a way to pay them back. And often, most investors are really looking for a pretty significant return on top of just getting paid back, more than what it would cost with debt.
Yeah, so good. And so, again, to sort of weave in Kimberlyn and Allison's recommendations here, friends, start with the relationship and make sure that the conversation is happening around them being able to hear from you. What's your vision? Where do you want to grow this business? and how they may or may not fit into that experience. And the may not, I know, is a super scary thing, and we'll come to that a little bit later. But for now, Shannon, I want to stay on this great insight of like risk and risk evaluation. And I'm going to flip it to a positive and say, and positive signals for when you're talking with someone great like you and going, please, can I have some money in my bank account? What are some of those positive signals that matter when you're getting to know an entrepreneur and they're trying to say, like, now is now good for me, Shannon, to apply to Wakeif and get a good yes at the end of the day?
Yes. So one of the signals that I look for is a clear articulation on what the business does. I say this to entrepreneurs all the time. You should be able to tell me what your business does in 30 seconds or less. If we're still talking 5 minutes later and I'm scratching my head and I can't figure out what it is that you do, let's go back. So you should be able to explain what you do very quickly. Then we can get into the nuts and bolts of the why and the how and the when and and what's actually needed. So that's the first thing. The second piece is understanding the market landscape, right? You don't operate in a silo. None of us should be operating in silos. And so your business does not operate in a silo. Yes, you have your lane. Yes, you have your customers. Yes, you have your industry, but there is a whole world around you that can impact the way that your business plan behaves, the way that your revenue behaves, the way that your marketing behaves. And so when we think about going, the underwriting piece of it, the 5 C's of credit, one of those C's is conditions, right? So what are those conditions that exist that could impact your business either positively or negatively? And what do you know about those conditions? And how will your business respond if those conditions change? So these are some of the things that we look for when we have these conversations with small business owners. What is the market landscape? Where do you fit within the market? What is your positioning? Who are your competitors, right? What happens if this occurs, right? How do you pivot? What are you thinking about? And you may not have all of the answers, but just to know that someone is thinking ahead and thinking about those things and potentially putting some plans in place, then we can come in and help along the way.
Ah, so, friends, I once upon a time, don't hold it against me. I used to be in venture for like a decade, and it was always those moments where founders would come in and feeling so frustrated because they were like, just tell me what the number is that I need to hit. And what you just got from Shannon was gold because it's not about hitting metrics or numbers independently. It's about understanding what are the signals and what are the conditions that are going to change the trajectory of your business, that are going to either present opportunities or barriers, and then how are you thinking about overcoming them? The only thing that's guaranteed about a plan is it will be wrong. But if you can be focused on knowing what to pay attention to, everything's possible. And your funder relationships want to help you accelerate through those times too. So, Shannon, thank you so much for really enforcing, I think, this confidence around like, it's not about evaluation of getting a number wrong. It's much more about understanding like your market dynamics, especially as only an entrepreneur can. I guess maybe to double click on that, we love the idea of like small habits that can actually be improved over time with practice. Are there small habits that you would suggest entrepreneurs start to think through in building trust with funder relationships that you could advocate them?
Yes. So I think we've already said it, building those relationships early. So start having conversations with your lenders, with your finance partners before you need capital,
Yeah.
right? So we don't want to get to the point where we need capital and it is, I need it in the next 2 weeks, but you don't have a relationship with anyone. And so now you're effectively cold calling and trying to introduce yourself and trying to introduce your business. Show up, make the relationship, begin the relationship before you need capital. Get to know the finance partners in your community. Find the ones that are working with small businesses. Find the ones that are working with entrepreneurs. Not all financial institutions will work with startups. Not all financial institutions will work with early stage entrepreneurs. So that's where this relationship building. So you have an ICA, you have a Wake If, you have a Well. So they're levels, right? Because if you come to me, there's certain things that I can fund. There's certain things that I'm going to send you to Allison for because this isn't our lane. This isn't what we do. But once you're done with Allison and you graduate from Allison's programs, then you come back to me, and now I can fund the next phase of your growth. And then when you're done with me, because you've outgrown our relationship, because you've grown so much, then I'm going to transfer you over to Wells because now you're ready for that bigger relationship. And this is how the ecosystem works. This is how we all work together to support the entrepreneurs. But it starts with making that relationship. If you go to a bank and they turn you down, maybe you didn't go to the right, you weren't at the right starting point. There was another starting point that where you should have gone to get the approval that you needed, or at least to get the technical assistance and support that you needed so that you could become capital ready. Because the last thing any of us want to do is give someone capital that they're not ready for, because that leads to really, really bad scenarios and situations for our entrepreneurs. So that's the first thing, building those relationships early. The second thing I will say, and this goes back to what I said about knowing the market and the landscape and what's going on around you. Join your chambers. If there is a business chamber in your area, join the chamber. Talk to other small business owners, attend their events. They frequently bring in government officials, they bring in economists, they bring in all of the folks to help inform what's happening in the market so that you know exactly what to do with your plan. They can talk to you about, okay, here are the economic headwinds that you'll be facing, and this is what you may need to think about for your business plan. This is where you may need to move some money. This is where you may need to think about shifting your customer focus because this is what's coming. So staying informed in that way helps you with that pivot that I'm talking about. But these are the things, and we show up to those events as well. So your bankers are there. The bankers are there, the funders are there at these chamber events, at these economic briefings, because we want to see who's in the room as well. And we know that there will be small businesses, they're looking for support, and we want to be able to help. But these are just some small things that can be done, until you get to that capital relationship.
No, I love that. And I think that strategic guidance of almost mapping out the relationships that can help propel your business forward. I'm seeing a lot of really good questions that are popping through of like, okay, how do I figure out like who to talk to, or like, should I be talking to VCs or not? And I think part of it comes from like really sitting with some of these big questions that you need to yourself, and then figuring out who do you want to talk with to better understand if that might be a fit for you. Ideally, as we've said, it's not coming in at the 11th hour when it's a scary time for a founder to feel really vulnerable because of the desperation that sort of sits with them and getting that capital in the bank account really quickly. Um, the one reality that I think we all know is that time is very limited. And, as much as I think we'd all love to be able to say we can meet with every single entrepreneur that comes through and really spend that time and that investment, it's so hard. And equally for entrepreneurs to take them away from their business, to have time to invest in these relationships is meaning they're saying no to a lot of other things. Kimberlyn, I'm going to put you in the really hard spot then of saying, when you're meeting all these great founders across all of the incredible programs that Wells Fargo is involved with, how do you know, or what information would guide you in being able to help identify those founders that you do want to follow on the trajectory? And like, you're like, this is someone that I think we can help over time. What are some of those signals that can indicate the ability for a longitudinal investment in the relationship, if you will?
Yeah, and I think Shannon just hinted to it just a bit, which is key, which is be able to tell your story,
Yeah.
be able to tell your story succinctly in a very tight time frame. As you said, Nicola, we're meeting with a lot of entrepreneurs in a really tight time frame. And so being able to say, this is my business, this is my type of customer, my demographic that I'm supporting, the market that I'm in, this is what my business is really thriving at and great at. And here are my challenges. And that's a lot to pack in into 60 seconds. But as much as you can get those points across, we have an opportunity to start to build a relationship with someone who can open access in various ways. What I've found in my experience, those entrepreneurs that I don't forget will say, "Hi, Kimberly, nice to meet you. I make cakes and I am about to grow my business by X amount. If only I could accomplish this thing or cross this hurdle," right? And that will capture my attention. One, you told me what you do and you told me what your challenges are. And I immediately start to think, how can I be supportive? Who's in my network, if not at Wells Fargo, but what are my partners, right? Like WACF, like ICA, that can really help you to overcome that barrier. That's where my mind start going. And so what I think a lot of entrepreneurs miss is the importance of storytelling and being able to talk about your craft, to know it well, to again know your challenges and where there are opportunities is a skill set in itself. And so I always encourage entrepreneurs to be tight on their story, be open and transparent. Back to building relationships, we all know this to be true. You're not going to build a relationship without being trustworthy and transparent and honest. It's okay to say my business is not currently thriving and these are my challenges. It's okay to be able to communicate that as well. Make that part of your story, again, because you may tell it to the right individual that can be helpful in your journey.
Gimlin, I love that you pulled on a favorite story of ours too. Gimlin's actually referencing an amazing entrepreneur that we had in
Yeah.
Chicago, and it's not that long ago, where a trajectory really was changed, but it started with that honesty. And I remember still being on that stage where it was like,
Mm-hmm.
grown so much, but we still have so much more growth. But there's a limitation of capital financing that's really needed to get us to be able to jump on the next enterprise level deal that we want to. And that sparks interest, right? So sometimes it is that vulnerability and also knowing your questions that you really need to home in on to find the right people that can pull you up on that mission alignment of the journey you're on. Thanks for sharing that. Allison, I'm going to actually ask you to do the same because I think there is so much nervousness around this idea of venture, and understandably so, right? Like we read a lot in the not to be named awesome media outlets that are out there. And I think sometimes it goes well, very rarely it goes well. And a lot of times there's a lot of collateral damage that happens around this. So I want to break down a lot of that mythology of all the time people say it's a gut read. Like I know within 2 minutes if I'm going to invest in that founder or not. And I know that that's not true in your case. I know that there's such thoughtfulness that goes into it. How do you know when a founder is on that path to fundability through the ICA fund lens, especially because you're kind of in that friends and family early seed level? And then also, to kind of go to how Kimberly did, could you tell us about the last deal that you jumped on and were like, I am so going to invest in that founder, or I'm so inspired by that founder that I'm going to find a way to be helpful to them?
Yeah, it's great. Well, the first misnomer is really being clear about, are we investing in the person or are we investing in the business? And a lot of venture capital is investing in the person, and it's based on pattern recognition. Like the venture capital industry is notorious for this. I'm investing in this founder because we went to the same school. I'm investing in the founder because we belong to the same club. I'm investing in this founder because our kids go to school at the same school. That's pattern recognition, that's bias in action. So what we are working really hard to do is remove that unintended bias from investing. We recognize that a founder is going to be ready for investment and a good fit for us when this is a founder who has a demonstrated ability to be coachable. Their business is set up to grow, and that growth is going to create better jobs and very importantly, wealth creating opportunities for the employees. So that means it's not just a paycheck and it's not just a good job paying above a living wage, which is important, but it means that next time we have a pandemic, those employees have assets to fall back on, some sort of wealth generating tool to have ownership in the company, dividends from the company, you know, exit potential liquidity when the company exits. Um, so we're looking for a founder who truly understands what the value creation in that business is going to mean, not only for themselves, but also for their employees. And the trust, you know, a founder who really understands where their weaknesses are is somebody that is a joy to work with because nobody's perfect. And the more you try to show that you're perfect or that your business is like the silver bullet to whatever market or service or challenge that you're facing, it just makes a founder look like they're not being real to themselves even about this world that we live in and the viability of their business. The sooner that a founder can recognize those challenge points, the sooner we recognize we can be a value add partner. Um, and so the last couple of businesses that we jumped on in this market, and I'll tell you this, it's super true that particularly with investing equity or equity-like products, there's a seasonality to it, and it's in response to what's going on in the broader economy. We are trying to be a value add to the broader economy. So that means that what we do and how we do it is going to evolve along with what's going on in the external environment. I say that to say that in 2025, we actually had more debt structured investments than equity structured investments. The founders that we support need more debt now. The debt markets are shrinking. So that's what we can provide. We're doing all these innovative things around debt and debt structuring. We bridge. I'm not gonna, okay, now I'm just telling you now, we don't do this, but we did do one example of a founder who was raising a Series A, and they needed bridge capital to get to that close of that investment round. So we did a 90-day bridge loan to a Series A. Like nobody does that. It's crazy risky. But also, like, I feel we have an obligation to play a role that others won't play to get to the brighter side. So, two deals that we've done recently, they're both like really savvy entrepreneurs. They're building profitable businesses. One is in the ed tech space. So, this is a founder who's working through school districts and impoverished school districts in California, bringing education around health and healthy food. And there's a scalability to that business. There's a really solid business plan, business model, growth plan, and it's profitable. So that's a founder who came to us and we were like, yes, we want to make something work here. We went through 3 different product iterations with that founder, with our investment committee, with our own analysis to figure out what was going to serve that founder best. And we settled on one. We're already off to the races and a great partnership. And the other one, again, it was a local cleaning business, an eco-friendly cleaning business, which is notorious for having high turnover in their employee base. This founder bought the company and has increased retention to like over 75% year over year, which is insane for that kind of a company. And we did an investment in him. He's building a profitable company, wealth building opportunities for the employees in an industry where that's unheard of. These are companies and founders that are really attractive to ICA.
I can see why. I can see why. We've got a lot we could learn from these founders. We'll have to get them on next. All right, Shannon, I'm going to ask the question that never gets asked because it always feels like, in some ways, such a luxurious question for poor founders to think about. And that is, when should they walk from a deal? When should they say no to taking capital?
Yeah.
Tell them.
Okay.
No. I was just going to frame it with like, I know it's a bit of a hornet's nest, but it's so important that we do address that side, I think, today too.
Yeah, I think that well, a few reasons why. One, if the financing that's being offered doesn't actually solve the problem, or the structure is just not right for the business, right? So when you're requesting financing, you should always know, okay, what am I asking? What am I asking for? What problem am I trying to solve? And that funding should be able to solve that problem. A lot of times, what I've seen is that small business owners will take on loans that are too small. And so it doesn't really solve the need. And they're back 6 months later asking for more financing because the ask wasn't the request was not big enough to begin with. So that's the first thing. So making sure that if you're asking for this amount, if that amount is not possible, then you may have to look for other sources, or there may be a way to work with that lender to pace that financing, because not everyone needs $5 million, right? Maybe eventually you'll need 5 million, but you don't need 5 million today. So what are the needs that can be addressed today, and how do we finance that? And then how do we phase in additional financing? I would say another red flag is like the fast and easy money. Money that you get in 30 seconds or less with minimal documentation, no underwriting. Uh, I have had to refinance small business owners out of more of these than I would care to count. And typically, when I have to refinance these loans, it's because the interest rates have gone to 60% or higher. It's because these lenders are threatening to put a lien on the revenue of the business. It's because the small business owner is paying more in interest than they would under any sort of traditional financing term, and they're unable to grow the business. They're unable to generate cash flow outside of what's being used to cover the debt service. So I would say, walk away from those deals. They sound great, right? I can get my money in 30 seconds and it's a large amount. They typically come with fine print that you want to pay attention to, because it could be really restrictive to the cash flow. And then I would also just add to that anything that feels predatory in terms of pricing or structure. Weekly repayments may not work for a small business owner. Some of the accelerated payment terms may not work for a small business owner. Interest rates that start out really low, but then eventually get really high over time. That doesn't work for a small business owner. And so, or may not work for a small business owner. So terms, structure, making sure that you read the fine print and understand what could happen if you miss a payment and what the rights of that particular financial institution are. But also just the alignment with the mission of your organization and what it is that you're trying to do. You know, yes, we need capital, but not all money is good money. And so if it doesn't align, if the money does not align with where you're trying to take the business, if it feels wrong, I mean, there's that gut feeling that a lot of our entrepreneurs tell me that they've had when they walked away from opportunities. If it doesn't feel right, look for alternatives. But again, this goes back to that relationship building, right? And so making sure that you have multiple people at the table, because you could go to one of your lenders or your finance partners and ask, "Hey, I got this deal. And can you look at this term sheet for me? Does this sound right? Does this make sense? Does this feel right to you? Are these terms appropriate?" And they can give you the feedback that you need to help guide you as you're trying to make that decision, because we do know how scary that is. We do know how overwhelming it can be to get 7 pages of documents with legal jargon, and you're not a lawyer and you don't know what any of it means, right? That's scary. And it can be confusing. So use those resources that are available to help walk you through that process so that you're not signing on to something that, again, could really restrict cash flow.
Oh, so good. Um, and then there's also this reality, and Allison, I'm going to put you on the spot now to ask another really hard question, and it's one we hear all the time where it feels so hard because it's like a chicken and egg scenario where the one that they love, the one that's mission aligned, the one that's perfect to them is like, you're just too early or you're not there yet. And they're like, if I have the money, I can get there and then it'll be fine. And it just feels like it's the never-ending hamster wheel where they're stuck. What can you offer to founders who are just, feeling a little bit in that abyss right now? Like, how am I ever gonna get unstuck from this challenging situation of being what's needed to get the capital I need to prove that I'm a good fit for them?
I'm going to say a hard truth. And I say this with so much like care, empathy, appreciation, and respect for entrepreneurs who I think have more grit, more resilience, more ingenuity, more contribution to society than almost anybody else. So I appreciate you founders and entrepreneurs for doing what you do. We don't have a job without you. We don't have a purpose in society without you, truly. Um, it can also be really easy when you're in that chicken and egg scenario to get stuck in that mindset of if only I had the capital. And oftentimes, I loved in the beginning, we did the questions. Thank you, Cami, for those questions that those survey questions. Founders are so optimistic. Everybody was so optimistic. Everybody is also thinking about pivoting. And everybody was also like their number one concern was sales above capital. This is an astute group of founders. I'm in rooms a lot where founders are saying, my number one challenge is access to capital. But often, if you're really honest with yourself, it really is more about the sales and the revenue generating aspects of it. And so there's something in the business, there's something in your product or your service that's keeping those sales from taking off. You haven't quite got the market product fit yet. And once you get that, what starts ending up happening is you get this momentum starting to build. You have more the demand than what you can fulfill. That's where that's where capital really is the answer. You just need the capital to get the inventory or to advance the purchase order. And then there are capital providers out there that can serve that need. But often when you're feeling in that stuck place, there's actually some truth telling you need to do to yourself and some really objective looking at your business to understand what's holding back sales and being really honest and give yourself tough love and do the financial analysis to figure out, is it a particular sales channel that's not as profitable as I thought it was? It's not yielding the margins that I need. Is it a product market fit? Do I need to adjust my product somehow? But get really clear about what that is, and that'll help get you out of that hamster wheel.
Love that. Control the controllable. There are only so many hours in the day to be thinking about like where your efforts and heartaches go, waiting to see whether or not a no has suddenly become a yes doesn't yield the result. But focusing on those milestones, as we love at the center, getting movement going, momentum going, that's when things change for all the right reasons. All right, I am mindful that time is flying with these great conversations. I've got a rapid fire coming up. So hopefully we're all ready for this. I'm going to let anyone come off mic that is so interested in answering these questions. And they're actually sourced from a lot of the preliminary questions that our founders submitted. So again, thanks founders for sharing this. This one we get asked all the time. How do I build relationships when I don't have warm intros? What do I do? Tactical suggestions. What do you suggest?
So if you want to build a relationship with, let's say, a CDFI, and I think that CDFIs are great places to start because we are connected to the larger banks, we're connected to the community organizations, but we have all of us, we have events all the time. We are hosting things, we're sponsoring things. Someone from the organization is going to be at some event. Follow us, go online, follow us. Go to our social media pages, find out where we're going to be and show up. I mean, folks find me all the time because the flyers are out there. This is where I'm going to be. This is where we're going to be. This is where we're hosting. And they show up and you introduce yourself. And it's as simple as that. As a matter of fact, I just funded someone who did that at an event. I clicked on it today to fund the loan for I was so excited when I saw it come across my screen. Like, I know this business. The gentleman came to one of the events, introduced himself. I got him connected to our lending team, and now he's funded. So that it's as easy as that.
Oh, there you go. See, breaking it down. Kimberly, I see you come up mute.
I was going to echo what Shannon said, like build the ecosystem, and you're doing it by being on this call today, being part of the NEC and the milestone circles who have access to a wealth of professionals and experts in this space. And to Shannon's great point, when you go to those events, you start to connect when you come to a Milestone Circles event, you are connecting. There are going to be traditional banks in the room, CDFIs in the rooms, and other organizations that can support you with resources. And it may seem sometimes a lot because, as we already said, entrepreneurs have a lot on their plate. But just taking that time to invest in those moments, and slowly but surely, one connection will lead to another, is what I've seen. And you begin to build your board of advisors, air quotes here, but your board of advisors that you can plug into various ways to really help you to build that network.
Love that. So good. Okay, so dream state. I'm thinking about raising money 6 months down the road. What are the three things that I should be focusing in on right now and asking about in order to figure out my capital journey in 6 months' time?
Understand your financials inside and out. Make sure they're super, super clear. That's your past and your present. Know your projections inside and out. What are you building towards? What are your profitability margins in that plan? So past, present, future. And then three, what are your questions? What do you want out of your financing partners? And you can show up. I totally agree with what Shannon and Kimberlyn said. Show up, just show up. You don't have to know what you're going to talk about. Just show up and start a conversation. But through 6 months previously, start having those conversations and start to articulate what are your questions? What do you need out of your funding partner? And what are you going to need for your business?
Love that. All right, here's the last one, and I don't like ending. So we're gonna have a key takeaway in a second. So we're gonna end on a positive note, but this one needs to be addressed too. What do you say to a founder who has been repeatedly turned down for loans and grants and opportunities?
To keep trying, but I think the big thing is to find a partner that is going to sit with you and go and open up the books and have a real conversation about where they are and what some of the how another lender would be looking at the information that they're presenting, because it may be something as simple as your books aren't in order. You're being turned down because your books aren't in order. You aren't able to articulate your projections. No one understands the assumptions behind your projections. So now let's get you some help. Let's get some partners here to help you figure this out. But I would say find that trusted partner. Again, going back to CDFIs and our model, this is what we do with our technical assistance and support. Find a technical assistance provider, sit with that individual, explain the situation. I've been turned down 5 times. I don't know why I've been turned down, or these are the reasons why. And then we can get some help to so that the next time you apply, you have a better outcome. But I think it's finding that partner to help walk you through what some of those challenges are.
Oh, love that. And here's my PSA for all our friends listening today. The reason that I'm having this amazing conversation with these three change agents for entrepreneurs is really because we've come together and said there needs to be more transparency and confidence in general around how you navigate access to capital. And so from that landscape, we are going to be making sure that a tool and a workbook and support systems are more readily available for all of you in the coming weeks ahead. So stay tuned for that. But for now, I'm going to ask everyone to just give one last good, healthy, happy, mission aligned piece of advice to close us out. It has been such a treat being with you all today. Can I start with Kimberlyn and then Allison and then Shannon bring us home? Kimberlyn.
Thank you, Nicola. I'm with you. Time has flown by, so I'll be brief. What I believe the audience with is, it's been said already, but get your financial story tight, not perfect, but clear. Make sure you pressure test your business model for scale. If capital does show up, what does it look like? Is it going to grow my business? Am I trying to solve a problem that can be better suited with a different type of capital? And then build those relationships before you need it, right? You don't want to call, you don't want to get insurance, right? After you bought a house 10 years later, you want to get it before you even move into that home. So go ahead and start building those relationships sooner than later.
Oh, thank you for that.
Don't be afraid to ask for help.
So important, Shannon.
Your time is now. Everything is pointing to a rise in entrepreneurship, a rise in small business ownership, and it's going to look different for everyone. Do not be discouraged. Your journey is your own, and we are here to help you on that journey.
You guys are such rock stars. Thank you so much for being with us today. It's just been a treat. And Cami, over to you to bring us home. Thank you so much for all you lead at the center.
I am in awe. Community, wasn't that an amazing conversation? To our wonderful panel, thank you so much for taking the time to speak to us, to share your insights with our community, and set such a great overview. On behalf of the NASDAQ Entrepreneurial Center and everyone in attendance, we sincerely thank you for joining us. We would also like for you to join us for our upcoming webinars. You can view them by clicking on the link in the chat. Thank you all for joining us again, and we look forward to welcoming you back online with us very soon.